Good morning. Welcome to ATI ProMedia. Guys, can you give me a thumbs up? Brady Connor, can you hear me? We can hear me. I can hear me. I'm coming live from Fargo, North Dakota, and you never know how the internet's going to work. Actually, the internet's really fast, but for some reason, streaming doesn't always go well. We had a little bit of problem here in the recording yesterday, but the guys sounded great. Well, we got a lot of things to go over. Of course, we have to become bird flu experts again, but bird flu and cattle. Brady will break that down. We're going to talk about bridges and how that could affect ag equipment. Pretty big port over there. Was a bad day for America. Even the word terrorism got thrown out. Was that terrorism? Or it could show you how vulnerable America is when it comes to infrastructure and what's going on. Let's hope that's not the case. But I'm old enough to remember when two planes flew through some buildings. A very bad day for America. Let's hope that's not the case. Bitcoin's been on the radar. Cattle. Brady Huck's going to break down cattle, and there's been no shortage of information and order flow coming out of cattle. Of course, we have the USDA report, and if you want to watch that, folks, if you could do us a favor, the link's already out there. Tomorrow, around 10:50, 10:55, Brady Huck, Tommy G, Connor B, we're going to go live. We're going to watch price get discovered. We've been very specific on what we've asked people to do on ATI Pro Media Premium. And if you need a copy of that or you'd like to subscribe, here's the what not to do list by Mr. Brady Huck and Connor B. I watched it yesterday and they did a great job. It's interesting to watch these two mature not only as brokers and risk managers, but as media personalities. With that, this media personality is out of here. I have things to do, a flight to catch, and I am so comfortable handing off this show to the best folks in the world. Brady Huck, Connor B. You guys pop in. I'm going to pop out. Go be an expert on bridges and bird cow. bird cow. Um, I'm out of here. Someone cut me out. You guys have a great show. I'll be watching from
Get
the
him,
wings.
Joe. Get him out of here. He's making us blush, giving us compliments. The poor guy. He told us the temperature is like 15 degrees up there in North Dakota. So I feel bad about complaining when it's like 44 degrees in Central Illinois. So stay warm, Tommy. We'll see you tomorrow. Let's jump into the show. How's it going, Brady?
It's going good, going good. Hasn't quite warmed up here either, but I'm glad I'm still in Kansas and not the Dakotas right now.
What's Dodge City temperature right now?
Oh, I couldn't even tell you. I haven't been outside yet. Got the kids out of the house, threw them out the door. Yeah, then crawled into the basement. Yeah,
I know that feeling. The first thing, TG mentioned it right. Tomorrow, USDA report, and then markets are closed Friday. He gave a great intro and talking about that. Right, we'll be going live. Think about it. Think about the marketing plan that we have in place. And so, Brady, I'm thinking let's go headlines and then talk a little price action because yesterday was not what we wanted to see on corn, soybeans, and cattle. Correct?
yes, tough day yesterday, and kind of starting off tough on the grain side again here today. So let's dive into those headlines here real quick
Yep.
before we.
Yep. First one we
So-
have Go ahead.
Yeah, more info on the Baltimore Bridge collapse, creating bottlenecks. I think you got some notes there on this, right, Connor?
Yes. Yeah. So this bridge, right, it handles more auto cargo. It is than any other U.S. port. It's a big shipping terminal. Not necessarily going to affect us in the ag space and us in the Midwest, right? Most of our stuff's probably going to the PNW or down the Mississippi River if we're talking export. But it is a major auto port. 750,000 vehicles went through that port in 2022. And then other things, big coal, sugar, right? I said it didn't affect us in ags, but if we're producing sugar, it's a big sugar port. And the other thing is how long it's going to take to get back online, right? I think I saw some estimates that maybe they could get it going in a year, but I think it's going to take at least 5 years to rebuild that bridge is what I'm seeing, Brady.
Oh boy, yeah. So long tail on that, and definitely, yeah, not a good situation there. What do we got next, Connor?
Absolutely. I think let's talk what we know. Let's look at this price action ahead of the report. So right now, I've got December corn down about 4, right? It's coming back a little bit off the open. November soybeans down 5. Wheat's up a little bit, but yesterday, Brady, I don't know if you can pull up some charts and we'll look at it. Yesterday, into the day, we saw a big sell-off and a drop in corn and soybeans especially. So what are we looking at here?
Here we got July corn, I believe, that's May corn here. May corn, front month May corn on the books. So yesterday's action kind of tagged the 50-day moving average and sold off, broke below the 9-day and the 20-day, and here we are today, little bit lower, stretching down, new low for the move. Got that low back there on February 26th. That low was 408 3/4 on the May contract. Got to keep our eyes on that.
So that'd be about a 21-cent drop if we went down and retested that. So let's hope that doesn't happen. So looking at yesterday and on that corn contract, is that what happened in your opinion, Brady, as we hit that 50-day and triggered more selling? Is that what kind of started this free fall? Or is it more, are we scared of the big corn acre number and we're seeing selling ahead of the report?
Yeah, I think both those points there, Connor. I think you got some pre-report positioning, and then you got some technical stuff that's happening. I would be surprised if we saw much more downside ahead of the report, but you never know how these things are going to go ahead of reports like this. Get those new numbers and digest them, and then come out the other side and see where we go after that. Which contract do you want to look at next here, Connor?
Let's look at soybeans, and I think we'll save, really breaking down the report. We're going to save that for tomorrow's morning show, looking at historical trends and all that. But right now, yeah. So what we got here, May soybeans, Brady?
Yep, May soybeans. Looking at the front month again. Got a Fibonacci there. I'll get that out of the way so it's not distracting. But rallied here, similar low. The end of February, rallied up to 12.26. Last week, and then we're chopping right at that 50-day moving average here on front month beans as well. So.
Yeah, interesting. So same thing. We tested that 50-day on corn and soybeans for May, broke a little bit below it, and so we're coming back a little bit off the open. So we'll keep watching that, and then let's move on to the next commodity. Take it away. Walk us through what happened in cattle yesterday.
Oh gosh. Cattle just kept getting worse and worse and worse yesterday. Here we are today, looking real quick just at some price action on the charts. But the April contract, we have an inside trading day on feeder cattle futures, meaning we haven't broke below yesterday's low, but we're still inside yesterday's trading range. But yesterday we were down, significantly on the feeder cattle board, broke the 200-day moving average. Talked about that during the live show. It was great to be able to break this down. It's not great to see the markets go lower, but it was great to be able to break this down live while it was happening for the viewers watching. If you want to go back and watch that episode, it's on our YouTube channel. Check that one out. When we look at the fat side of things, another inside trading day, haven't broke below yesterday's, have held yesterday's low, which on the June live cattle contract, we tagged that 100-day moving average, a significant break on the cattle market yesterday. A lot of finger pointing when markets move like this. We're always looking for a reason why, right, Connor? And sometimes it's not just one reason. It's a culmination of multiple things coming together. And funds, they liquidated long positions. They've been on the long side. They've rebuilt their long positions. And you've got a negative cattle on feed report last Friday. You've got bird flu uncertainty. You got a Baltimore bridge collapse. You got some stock market stuff going on. We're off the highs a little bit on the stock, on the macro stock market. Packer margins are poor right now. Fed slaughter is, in March is going to be 10 to 13% lower than it was a year ago. And we've got cattle on feed in the month of March the cattle on feed in the month of March that have been on feed for 150 days or more is 6% higher. So just a list of, a laundry list of things that may be causing funds to say, I want to get out of the door here. I want to bail on my long position. I want to go to the sidelines and park my money somewhere else. Markets move, things change. And Connor, those who don't manage risk, they're the ones crying right now, in my opinion. It's not fun. It's not what anybody wants to hear to say. But if you didn't manage risk, you're feeling some pain. If you did manage risk, we've got some great positions in place. And those are you're certainly glad you have those on. We're never hedged enough, though, when it goes down. I don't believe, right? Are we, Connor? Never.
No, never. We can do our best. We're going to defend against it. But whether it's cattle, grains, right, we're always going to be long that market if we're in it. And so, yeah, great way to say it. We're never hedged enough in the declining markets. So, good segue. Let's talk a little bit about premium video. I really liked what we talked about. Just had a conversation Monday. Tommy and I talked about what we think we should position ourselves before this USDA report. And then you and I we kind of did the opposite, right, Brady?
Absolutely. Yeah. It was, yeah, with Tommy traveling and he asked us to fill in there. And I was happy with what we put together. It's fun. The what not to do list there ahead of reports and just marketing in general. Fun episode and some good stuff there.
Yeah. Things we saw in these lower commodity prices, we see certain trends catch some steam, right? And things that, historically, I don't really like to see. I don't like putting those risks on. So if you get a chance, check that video out today. I think we've got Nate Mangold and Brian Basting going to give us a nice fundamental outlook ahead of the report. That'll be a good, great video. So with that, I've got a couple slides, Brady. And
Okay.
so
Let's dive into those.
I thought we would look at, we haven't talked a lot about it on this show, but the corn soy ratio, right? No soybeans to December corn ratio ahead of this USDA report. And so when we look at it, black line is 2024. And so if you look at that, right, we're at what is that, Brady? At 253, 252?
Yeah, I think just a little over 2.5. Yeah, 2.52, 2.53. Yep. So that's beans are 2.5 times the price of corn, right? That's what that means for somebody not in ag.
Right. So what's that telling us is right now, right, the Chicago Board of Trade is telling us it's favoring soybeans a little bit, right? Not a lot, which is kind of against the trend that we've been here, especially me in Central Illinois, where it feels like we're scared of the big corn acre, right? Where guys want to plant corn. That seems to be the sentiment, but it's things to look at. Pull that chart up again, Joe, if you don't mind. If we're looking at it. And so here's another thing. Reuters did a great example looking at previous years when March corn acres came in way above the trade guesses. As you can see, that box is a little bit below where we're at for 2024. So we'll see, right? We're nervous of a big corn acre, right? That's what we want to defend against, but we'll see what it brings and go from there. So interesting to see. We'll keep watching that corn bean ratio.
Yep. So the market's trying to buy bean acres with that ratio. We got the March prospective plantings report, grain stocks report tomorrow. That'll change. The markets will change. The ratio will change, and we'll see where the heck it ends up in the fall, right?
Yeah, absolutely. And as you can see, historically, we don't need to pull it up again, Joe, but just looking at that ratio can change dramatically year on year. And so
kind of, it reminds me of your rock star chart right there, down, up, down. Remember that flashback?
The old rock on marketing. Yes, I do. That was at the beginning. Might have to break that up. Right. Come to Connor if you want some really technical chart analysis.
It's good stuff.
Yeah. So last thing I got, and we'll wrap it up, Brady, is we're just looking at. Let's do it. Let's pull it up like this. Looking at South America weather. Cesar, our head of research, sent this to us, and so we're looking right. April. This is looking at April, May, June weather prediction. So it's a long way out there. I'm usually not a big fan, right? We're not going to put all our eggs in a basket in predicting weather 15 days out, let alone 3 months out. But it's worth looking at because that's when this corn crop is going to get made in Brazil. And so they go from their wet season into March, April, a little bit into May, and then they go into their dry season, right? So when their corn crop is made, right, if we have a window in the Midwest where we want a lot of rain, we want that precipitation, right? They have a cliff. When the rain stops, historically, it really stops and they pivot to a dry season. So with that, what are we looking in terms of prediction is normal to a little bit below normal, okay? That central part of Mato Grosso, right, where we see the significant amount of safrinha corn acres. Right now, we're predicting a little bit below average on precipitation. So what's that mean? It means we'll keep watching it. We'll see, right? But how much precipitation do we need to make a good corn crop, right? We'll leave that up to debate, and we'll know that in about 5-6 months. But it's worth looking at.
Yep. Well, there's so much going on, Connor, in the world of ags right now. You got the U.S. crop. We're getting ready for the acres there, getting ready to throw that crop in the ground. We got the safrinha corn crop, with I think 96% planted in South America, and weather. You got two big crops. That safrinha corn crop is 3/4 of their production, corn production. So many dynamics here. We're entering silly season, Connor. It's going to be a circus.
Absolutely. We're entering into that seasonal time frame in the United States, right? Hopefully in 2-3 weeks, we're going to see planters rolling in, especially in Central Illinois. Hopefully, I don't know how early they get after it in Dodge City, Kansas, but we're going to be entering into that seasonal time frame where usually maybe we see a high in the futures market. Only problem is it's when emotion takes over too, and then couple that with what's the safrinha corn crop going to make, right? It's a lot of uncertainty going forward, and it's worth managing that uncertainty. So last thing, I'll wrap it up. Looking backwards at cumulative precipitation, and as you can see, they're at normal to above precip for the past 15 days, and even the past 30 days, right? They've had more than enough rain, right? This crop went in the ground really well. The safrinha corn crop is off to a good start, so now we'll just keep monitoring how it finishes.
Okay. Yep. Some uncertainty on the back ends, but pretty good start on the front end. Good stuff, Connor.
Yeah. So I think with that, Joe, we got any questions? We'll pop those up there, but then we'll get out of here. Farmer Brett, happy Wednesday. Maybe this is a dumb question. No dumb questions, Brett. But do you guys use MACD when reading charts?
It's a good question. I don't know. My opinion with charts is they do a very good job of telling you where price has been, not necessarily where price is going. It's all back looking. So when it comes to marketing or risk management, I try to take charts out of it unless I'm trying to make a point on where the markets come from, where the markets has been, and what type of opportunity you have today, or how bad it could get going forward. Just to try to put things in perspective. But some of those technical indicators that traders use, I steer clear of those when I'm working with my customers for the most part. But nonetheless, they get traded, they get used. Oftentimes, to me, technical type tools they sometimes work because of their popularity and that everybody's watching those same numbers and same levels.
Yeah, absolutely. They're a good tool, right? Especially if we have, if we are hedged, but we're looking for a point to maybe make some sales. I like looking at charts, but I think also to keep in mind, remember, sometimes it feels like financial astrology too. So, and then we got the Ag Bull, Tommy Grisafi, saying it's cold in Fargo. Stay warm, Tommy. Anything else before we wrap it up, Brady?
That I think that's it and enough for today. We got a lot of stuff tomorrow. Big day tomorrow. Make sure you join us at 9 a.m. for our live at 9. We'll be 10:55. We'll break down the report and the numbers as they come out. Tommy G, Connor B, Brady Huck, myself. And then we got the A team in the afternoon. What time does the A team come on? Connor, do you know?
I think is it 1:30, 1:15? Yeah, Rick's giving us the thumbs up. So right before markets close, they'll give us the A team will give us the big breakdown. Yeah, really looking at it. Yeah.
Cool. So, big day tomorrow. We'll see you guys then.
All right. See you, Brady. Bye.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.